Welcome to episode 193 of the Executive Protection and Secure Transportation Podcast. I'm your host, Larry Snow. The podcast is provided by the International Security Driver Association, and every week we share secure transportation and executive protection headlines, news, trends, and educational content for today's practitioners. In this week's episode, the topic is an answer to a question: why do I need secure transportation? A marketing tool from the IRS. On page 136 of Joe Autera's book, The Professional Guide to Planning, Managing, and Providing Secure Transportation, is written as one of the better answers to the question, why do I need secure transportation? Here's a quote from the book. It has been said time and time again that there are only two things in life that are a certainty: death and taxes. While no one enjoys paying taxes, virtually everyone would rather pay them than be confronted by the other. If the right conditions are met, the security driver is one of the few people on the face of the earth that can reduce the principal's risk of both. Naturally, this brings us to the other elements of the business case of having a security driver or solo practitioner supporting the principal. Understanding the business case for secure transportation starts with gaining an understanding of IRS Regulation Part 132, Section 5, which dictates that the conditions under which corporations and/or their executives may be eligible for tax deductions when secure ground transportation is provided. End quote. Every 2 years since 2013, the ISDA produces the Executive Vehicle Survey. One of the survey questions asked is, do you know of the IRS regulations concerning secure transportation? And surprisingly, every year, a large number of practitioners say that they don't know or understand the IRS Code and Regulation. In fact, the regulation is called Secure Transportation, and it can and should be used as a marketing tool. So let's get into an explanation of the IRS Code, and that is when a driver and vehicle are provided for an executive, there are IRS guidelines they must follow if the executive and the company want to deduct the cost of the driver and vehicle. The IRS covers these guidelines under the Executive Compensation Fringe Benefits, Audit Techniques, and Guide. As an individual marketing and/or supplying security drivers, or if you are a secure transportation provider, you need to ensure your marketing materials mentions that you are in compliance with the IRS regulations regarding security-related transportation. The IRS Code requires that overall security program consistently apply appropriate protective measures in areas such as work location, residence, traveling to and from the work location, and potentially traveling for business or personal reasons. If the secure transportation supply does not meet the IRS Code, the transportation cost is considered a perk to the executive. As a perk, the executive will be required to pay tax on the amount of the service. If the executive or their company believes that the service provided is secure transportation but does not meet the IRS Code, specifically the code that defines a security driver, then the executive unknowingly is personally responsible for the taxes on the amount of that service. If this scenario continues over a period, the executive is personally responsible for the tax on the service, the interest, and penalties, which can be a considerable large sum of money, not to mention one pissed-off executive. I suggest reading Joe Autera's article, Perk or Prerequisite: The Security Driver from a Business Perspective. To find out more information about the IRS Code, we'll have a link to that in the show notes for this episode. Also, another question from Joe's book is, so exactly how is it that someone goes about making sure their executives are eligible for this tax deduction? The first step in the process is the most critical, demonstrating the existence of an overall security program that provides the employee 24-hour protection. The IRS defines a program that provides 24-hour protection as one in which the employee in question is protected while at their residence, commuting to and from workplace, at the workplace, traveling for business or personal purposes. Of particular importance is the fact that to be considered an overall security program, the security measures must include a bodyguard/chauffeur trained in evasive driving techniques, and the employer must provide an automobile specifically equipped for security. While that particular paragraph in the tax code goes on to mention other measures such as guards, metal detectors, alarms, or similar methods of controlling access to the workplace and residence, it is important to note that the only security measure the program must have is a bodyguard/chauffeur trained in evasive driving techniques. It may come as a surprise to some, or to no one at all, that the IRS is not just going to take the employer's word that they met the standards for an overall security program. To claim that the conditions described above have been satisfied, the employer must commission an independent security study to assess whether the circumstances that create a need for the fringe benefits in question exist, and if so, that an overall security program also exists. Furthermore, the employer must implement all the recommendations contained in the study, not just those which they feel are the most important, most beneficial, or least expensive. The IRS Code requires that the overall security program consistently apply appropriate protective measures in areas such as work location, residence, traveling to and from the work location, and potentially traveling for business or personal reasons. If properly implemented and based on the assessment of the independent third party, the cost of an executive protection program, which includes executive protection agents, security drivers, residential alarms, etc., may be excluded from a principal's personal income tax regarding fringe benefits and reduce corporate tax liabilities. The decision to use or hire executive protection specialists, security drivers, or secure transportation providers is often based on the terms of the client's kidnap and ransom insurance policy. In the corporate and high net worth community, kidnap and ransom insurance is the catalyst for the use of secure transportation and executive protection. For additional information, we suggest the K&R content found in the ISDA Business Center, and we'll have a link to that in the show notes as well. So not all protection markets need this IRS Regulation Part 132 paragraph or Section 5 compliance. In our honest opinion, Part 132 is what separates the full-time market from the part-time market. Also, not all protection markets may be affected by the IRS Code. We, the ISDA, are not tax accountants and/or lawyers. If you offer secure transportation services, we would strongly suggest you have someone with knowledge of the tax codes give you an opinion concerning your compliance with the tax code. As we mentioned, to receive the tax benefits of IRS Part 132-5 also requires the employer to provide an automobile specially equipped for security, but they do not go into an explanation of precisely what they consider a security vehicle. An armored vehicle would obviously be considered a security vehicle. As we have mentioned many times in our podcast episodes, our executive vehicle surveys indicate a growing number of companies and secure transportation providers moving towards armored vehicles. But there are more straightforward solutions that have met with approval of the IRS. So here are some solutions or considerations that you might want to go with. Install run flats. Years back, installing run flats was a complicated process, but in today's market, run flats are easier to install and do not have an adverse effect on the vehicle's ride characteristics. We suggest taking a look at ISDA member Gerardo Corona's articles concerning run flats, and we'll have a link to one of his articles in the show notes. In an upcoming podcast, we'll be covering information and data we discovered conducting backing up maneuvers with deflated tires and run flats. All we can say for now is that it was a unique experience. Another consideration is shatterproof glass. Just keep in mind that shatterproof is not ballistic glass and is usually used on the side windows only. Also, there have been scenarios where the shatterproof glass separates from the vehicle window, so choose the installer wisely if you decide to use shatterproof glass. And one other solution or consideration you might want to use for your security vehicle is communications. And just a side note here, speaking of communications, for those young practitioners out there was security driving and executive protection before there were cell phones. Honest. There were companies that supplied communication and tracking for executive vehicles. Such a company sponsored the Old Scotty School. Back then, GPS was at its infancy, but today's GPS systems are small and sophisticated. So, wrapping all this up in summary, given how vague all of this IRS language is, this is a topic that should be discussed with your tax attorney to ensure that the measures being implemented will comply with the IRS regulations. We suggest you learn about personal security assessments as well and the companies that conduct them. They are familiar with the IRS Code and many times make recommendations based on their audits. If you Google personal security assessment or personal security audit, you'll find an abundance of information, and we have a link in the show notes from a security company that supplies this particular service. Although this podcast is about marketing and the IRS, we would be neglectful if we did not discuss the IRS in Part 132 without mentioning protective driver training. The practitioners looking for driver training need to ask if the training meets the IRS Part 132 requirements and do not accept the simple answer yes. Ask them to explain what Part 132 is and its implications on secure transportation. A while back, we asked that question of a security driver training provider, and we were told, yes, we are approved by the IRS. As you might imagine, the IRS does not approve driver training. Those third parties who conduct the personal security audit and the K&R companies do have preferred trainers and recommend them to their clients, but the IRS is not involved in the process. And lastly, as we mentioned, the security program must have, not should have, a bodyguard/chauffeur trained in evasive driving. The question then becomes, what type of evasive driving will they accept? That's a wrap for this week. Thanks so much for tuning in to the podcast. If you haven't done so already, be sure to subscribe to the podcast from your favorite podcast app so you won't miss any future episodes. The accompanying blog post, aka what some people call the show notes for this episode, has links to all the topics I shared. That link is securitydriver.com/podcast, and then scroll down a little bit and then click on the picture that says 193. We welcome any comments, feedback on the podcast or topics that were discussed. If you have a moment, we would really appreciate a review of the podcast. 5 stars would be greatly beneficial. Hint, hint. A review helps us make the podcast better and reach more people. If you have an interest in going much deeper into these types of topics, I invite you to check out the International Security Driver Association's website and consider joining the membership to gain access to the Encyclopedia of Executive Protection and Secure Transportation, the ISDA Knowledge Center. For more information on all the member benefits, head on over to isdacenter.org.